Hello friends, hi. Let's discuss today about exchange traded funds. What are these exchange traded funds? And in this we'll discuss mainly about BeEs, which are benchmark exchange traded schemes. Why are these called benchmark exchange traded schemes? And will indirectly the benchmark is like nothing but standard. If you want to buy Nifty, indirectly you can buy NIFTYBEES and it will directly mimic the performance of Nifty. Similarly, Bank Nifty, Gold also. If you want to buy gold, so you can buy gold BeEs, which are relatively cheaper than the gold actually, and it will almost reflect the performance of the gold. And how we're going to invest and what are the advantages over mutual funds and in which we need to invest, this we'll go to discuss. So at first we'll discuss the comparative story with the mutual funds. Why are mutual funds good and why are ETFs good? So mutual funds basically it depends on the fund manager and the asset allocation on the fund manager and the risk profile to choose the mutual funds we choose, and basically it depends on exit load and also the expense ratios. Compared to the ETFs, mutual funds expense ratios are high, whereas in ETFs you will be seeing mostly like less than 1% of the expense ratio. In this way, the ETFs are more beneficial than a mutual fund. What are the other factors that you can consider ETFs for this? And in mutual funds, you can get the NAV of the mutual fund at the end of the day, whereas here it will directly be on the exchange. It will move like a stock in every second. So these are the most liquid stocks, and these are also the best in terms of transparency. In terms of mutual funds, if there is an asset allocation, if there is change in asset allocation, a bit of change, and you will not be getting to know until you ask them or until you open the website. Whereas if you invest in this type of BeEs, for example NIFTYBEES, if you consider, it is directly performance of the Nifty 50. So if there is change in Nifty 50 stocks, and it will be directly changing the Nifty 50, and it will be the direct weightage of the Nifty 50 in NIFTYBEES. Okay, now let's have the discussion about the tracking error. What is this tracking error? So for example, if Nifty gives 10% in the next 1 year, but NIFTYBEES gives only 9.5%, and this remaining to 0.5% of this is called the tracking error. So the tracking error should be less. If you want to invest in some BeEs, just check the tracking error should be less. Why some tracking errors will be more and why some other tracking errors will be less? So for example, if you have some less liquid ETF, in that you will be having either it will be having like a premium or it will be in discount. So these are the main things to consider before you buy a BeEs. And what are the top 5 BeEs that you can have in terms of volume and in terms of value? NIFTYBEES, Bank BeEs, Gold BeEs, Liquid BeEs. Liquid BeEs are nothing but indirectly the underlying is the government securities. Okay, and the Nifty IT, which is like net fit. So this how we're gonna invest, that I'm going to show you in the Zerodha terminal, and how are these price ranges. Even there is no minimum investment in this kind of ETFs. And for example, if you want to buy the NIFTYBEES, so for example Nifty is running around 17,000 and it is like 1 by 100th of the Nifty, the price of the stock will be like 170 rupees. You can buy one Nifty, and it will, if the Nifty moves by 1%, and it will also directly move by 1% if you neglect the tracking error. So this is why how you can be informed and you can be transparent about Nifty. And not only Nifty, Bank Nifty and any other, you can have the IT, metal and pharma index also, fund, exchange traded funds. But these are very less liquid, and before you consider buying this, just check the liquidity before you buy, or you want, even if you want to sell. Else the transaction cost will be huge and you will be paying for that rather than for returns. So this is how the exchange traded funds are mainly related with the mutual funds. So that's it for today guys. So let's discuss how we're going to invest in Zerodha terminal now. So I open terminal for you. So I'll close all the things that I have right now. So now let me type BeEs, Bank BeEs, Gold BeEs, Liquid BeEs and NetFit, which are ITBs. So these are the things. If Nifty is running around 172.87, now the NIFTYBEES is at 187. So Now I'll show how the Nifty 50 is directly dependent on, sorry, NIFTYBEES is directly dependent on Nifty 50. So this is the graph that we have for Nifty 50 for a day graph, for example, from 11 to 3 o'clock on 17th of March. So if I open the NIFTYBEES, the graph is similar. This is what I want you to understand. So if you can invest in NIFTYBEES indirectly, that you are investing in Nifty 50, and you can hold it for a long time. It's like you are holding a stock, or here you are investing in a basket, like you are investing in a pool of all the securities of Nifty. So if you want to buy, you can just click buy, and for one share you need to pay like 186 rupees for if you want to 100. So just type 100 and you can just click buy. And if you want to day intraday, you can day intraday, or if you want to play long term, you can play long term. If you want to buy at market price, you can buy. But I suggest you to buy always at the limit price, and initial half an hour is not liquid, as I'll show why. So see here, so initial there is a red candle on from 188 to, and again it is opened around 185. So these there is 3 rupees which there is a illiquid. So even if day before that day, and every initial 5 minutes you need to avoid. So better you, if you can avoid till 9:30, and then you can, if you want to buy, you can buy after 9:30. So on whatever the price you can. So that's it guys for today. If you have any doubts, please drop a comment. Thank you.